Joining me now, Democratic Congressman Joe Courtney of Connecticut. Congressman, thanks for joining us here. You've seen the prices. I was looking up before we came on air. Your state's seeing an average of $4.11. No doubt that your constituents are not happy. President Obama taking aim at speculators. You want stricter rules around oil price speculation. What would you like to put in place that might help keep these high prices that we see here on screen lower?
Sure. Well, Richard, last year when we passed the Dodd-Frank's Wall Street Reform Bill, one of the key sections of the Act, Section 737 to be exact, actually gave the Commodities Future Trading Commission the authority to limit positions purchased by interests in the energy trading markets who have no connection to either the exploration, production, or distribution of oil. What the President said yesterday, which frankly I was delighted because it was long overdue, a lot of the price volatility and increase that's out there right now is being driven by forces that are outside of the business. And you know, here in Connecticut, where again my town, it's $4.25 a gallon, people who are in the business of delivering oil, the guys who are at the gas station, have been screaming for months that the market forces, supply and demand, do not justify the prices that are showing up again on these energy trading markets. So what the Dodd-Frank's bill did is it gave CFTC, the Commodities Trading Commission, the authority to limit the amount of positions or buys that these groups that are on Wall Street who add nothing of value to the production of oil or delivery of oil from occupying positions. Now,
well, Congressman, some say that it may not be all speculation. GOP saying prices are driven up by EPA regulations, for instance. You know, the hundreds of summer blends, for instance, that's part of it. They're all required by the EPA to meet certain regulations related to that. They say the EPA needs to be actually reined in. That will help keep some of the prices down as well. What do you think?
You know, if supplies were strained right now, or if demand was spiking, I could actually, you know, find that argument somewhat plausible. But the fact of the matter is that anybody looking at the measurements out in Oklahoma or other places, I mean, as the President said yesterday, supplies are not short right now. So what CFTC can do is implement the law, which again, I mean, this is not like talking about a proposed bill. You know, I'm a co-sponsor of the T. Boone Pickens bill for more domestic exploration. I mean, a lot of those things we need to do. But the fact of the matter is we have the tools right now to begin to take out of the market forces that are really, for no reason, driving up prices unnecessarily. And all I can tell you is for the guys who really, you know, need these markets to hedge a position, again, oil delivery guys who want to sell lock-in rates for next winter up here in New England, they won't even touch that market right now because they completely distrust what's going on right now. It's not transparent and it's not connected to real forces of supply and demand. CFTC needs to act. They need to implement these rules, which Congress gave them last year when President Obama signed the Wall Street Reform Bill into law.
CTFC, of course, governing those regulations that you would like to strengthen is what you're alluding to there. And of course, you allude to the question of how this is happening. A lot of customers who use gas don't know themselves. They just see these prices go up and up. So we do hope, of course, it makes a turn going south. Congressman Courtney, thank you so much.